Welcome to Talk Tickers. We're the ones who dig into those earnings calls so you don't have to, pulling out the insights that matter for experienced investors like you.
That's right.
Today we're tackling the latest report from a major player. We'll hit the key numbers, unpack what management's really thinking, and even toss around a slightly wild trade idea at the end.
Sounds like a plan. Let's get into the numbers first.
Yeah, let's do it. What were the headlines?
Okay, so second fiscal quarter, non-GAAP revenues hit $10.8 billion.
Okay.
And non-GAAP EPS came in at $2.85. Pretty solid.
And what drove that?
A lot of it was the chipset business, QCT. That brought in $9.5 billion, which was actually better than expected.
Right.
The real standouts within QCT were automotive, up a huge 59% year over year.
Wow, 59%.
Yeah. And IoT, the Internet of Things, that grew 27% compared to last year.
Okay, significant growth there too. What about the licensing side, QTL?
QTL revenues were $1.3 billion. Now, looking forward, the guidance for next quarter's revenue is between $9.9 billion and $10.7 billion.
That's okay, bit of a range there.
Yep. And non-GAAP EPS forecast is $2.60 to $2.80.
Got it. And shareholder returns, always important.
Definitely. They returned $2.7 billion this quarter, about $938 million in dividends, and $1.7 billion through stock buybacks. And they actually upped their target now, aiming to return 100% of free cash flow for the whole fiscal year.
100%. Okay, that's strong commitment. Let's dig into that chipset business, QCT, a bit more. $9.5 billion is clearly the engine here.
It really is.
Handset revenues were up 12% year over year to $6.9 billion. What was behind that specific increase?
So that handset growth, it was mainly driven by more volume in the premium Android phones.
The high-end stuff.
Exactly. And interestingly, government subsidies in China apparently gave those numbers a noticeable boost.
Okay. So subsidies playing a role there.
Yeah.
What about IoT? You mentioned a 27% jump to $1.6 billion. Where's that demand coming from?
Yeah, IoT is looking strong across the board, really. Consumer, networking, but especially industrial applications.
Industrial. What's happening there?
Well, what seems to be happening is this shift. More adoption of their microprocessors, and importantly, putting AI capabilities right onto the devices themselves, at the edge.
Edge AI in industrial settings. Okay.
Yeah, that trend seems to be creating quite a bit of demand.
Now, let's circle back to that automotive number. 59% growth. Nearly $1 billion in revenue. That really jumps out.
It absolutely does. A huge part of that is simply getting their tech designed into more new cars rolling off the line.
Right.
Particularly with their Snapdragon digital chassis platforms. Think of it as like a whole suite of their tech for the car infotainment, connectivity, driver assistance.
The whole package.
Pretty much. And they mentioned securing 30 new automotive design wins just this quarter.
30 new ones.
Yeah, including 5 specifically for ADS, advanced driver assistance systems, things like lane keeping, emergency braking, that sort of stuff.
Okay, so real momentum in getting designed into future vehicles. Now, the licensing side, QTL, you said $1.3 billion. Seemed a bit flat.
Yeah, it was flat year over year. EBT margin was 70%, but the revenue itself was actually a little below what they expected.
Oh, why was that?
Mainly seems due to lower handset sales, specifically in some emerging regions.
Okay.
And they expect QTL revenue to stay kind of flat next quarter too, year over year.
Got it. So looking ahead, the guidance suggests QCT, the chipset side, keeps climbing.
That's the plan, yeah. The projection for QCT next quarter is between $8.7 billion and $9.3 billion.
Okay.
If you take the middle of that range, it works out to roughly 12% growth year over year, still driven by handsets, IoT, and of course, automotive.
Can we break that down a bit? What are the growth expectations within QCT for next quarter?
Sure. They're looking at roughly 10% growth in the QCT handset revenue, mostly from the Android side.
Okay.
About 15% growth expected in QCT IoT revenue.
15%, right.
And around 20% growth in QCT automotive revenue for the next quarter.
So automotive still growing strong, even if not quite the 59% clip.
Exactly. Still very healthy growth projected there. They also gave a heads up on operating expenses, expecting non-GAAP OPEX around $2.25 billion next quarter.
Right. Good to know.
Yeah.
It's interesting, though. They seem pretty bullish long term, even with these solid near-term numbers.
Oh, definitely. They reiterated their long-term targets for fiscal 29. They're still aiming for $22 billion in revenue from everything except handsets.
22 billion non-handset.
Yeah. And within that, the breakdown they're targeting is $4 billion from PCs.
PCs, okay.
$2 billion from XR, extended reality, VRR stuff.
Right.
And a really big piece, $8 billion from automotive by 2029.
$8 billion from auto. That really underscores the strategic importance there. They also talked about a new platform, the X85 5G. What's the deal with that?
Yeah, the X85. So the key thing here is they're positioning it as an AI-powered modem to antenna system.
AI-powered modem.
Exactly. It's supposed to ship later this year, second half. And it's aimed at Android phones, but also automotive and IoT applications.
So across the board.
Right. They're really emphasizing the improvements driven by the integrated AI, things like speed, efficiency, coverage, power saving. It sounds like more than just an incremental update.
Like AI baked in at a pretty fundamental level.
That seems to be the idea. Could be a differentiator for them down the road if it pans out.
And what about PCs? You mentioned that $4 billion target. Are they making headway there? It's a tough market.
They are making some noise, yeah. They mentioned their Snapdragon 8 Elite platform is getting good traction in those high-end Android phones, especially the foldables, which often have AI features built in now.
Right, the foldables.
But in PC specifically, they claim Snapdragon-powered laptops have grabbed about 9% market share in Windows laptops over $600.
9% in that premium segment.
That's what they reported, yeah. In the U.S. and top 5 European countries, they've got over 85 designs in the works, are already out.
85 designs.
Aiming for over 100 commercial devices by 2026. And they're highlighting the growing software ecosystem too, like over 750 native apps now, over 1,400 games.
Okay, so building momentum on the PC front as well. And automotive, it just keeps popping up. Those design wins are turning into actual cars on the road.
It seems so. They really hammered home the strong ongoing demand for the Snapdragon digital chassis. Lots of new design wins, yes, but also seeing their tech in vehicles people can actually buy now.
Okay.
They specifically mentioned collaborations announced at the Shanghai Auto Show. Things like next-gen AI cockpits and pre-integrated ADAS solutions.
Makes sense, especially with the focus on China's EV market. Did they talk about acquisitions? Sometimes that's part of the strategy.
They did, yeah. Focused on industrial IoT. They picked up a couple companies. Edge Impulse.
Edge Impulse?
Yeah, it's a platform for developing AI models at the edge. And another one called Focus AI, which does computer vision also for edge devices.
So acquisitions specifically boosting their edge AI capabilities.
Exactly. Seems aimed at strengthening their hand in both industrial and automotive applications. They also launched something called the Dragon Wing Fixed Wireless Access Gen 4 Elite platform, based on that X85 chip with an AI coprocessor.
Okay, lots of moving parts.
Yeah.
So if we try to boil it all down, what were the main messages management really wanted people to take away from this call?
I think there were a few key themes. One was definitely the growing importance of, high performance connectivity and processing right there at the edge, not just in the cloud.
Right, the edge computing trend.
Yeah, and AI is becoming part of everything. They specifically called out generative AI, especially those smaller models that can run directly on a phone or a car, as a big, big opportunity.
On-device Gen AI.
Okay. They also made sure to mention they're navigating the whole macro and trade situation, said no major direct hit from current tariffs, and pointed to their diversified global supply chain as a buffer.
Always good to address that.
For sure. And just a general tone of confidence in hitting those long-term growth targets backed by their tech portfolio and all those design wins we talked about.
Right.
They did give a little heads up about Apple, though, expecting their share in Apple products to drop a bit in the fall of 2025, maybe down to around 70%.
Okay. Anticipating that shift.
Yeah. And finally, they doubled down on that capital return promise, 100% of free cash flow back to shareholders, while still keeping some powder dry for potential M&A if the right deal comes along.
Okay, that's a really helpful synthesis. Thanks. All right, let's shift gears. Time for our not financial advice segment. We try to cook up a trade idea, maybe a little unconventional, but rooted in what we just discussed.
The fun part.
Exactly.
Yeah.
So given all this talk about automotive growth, the Snapdragon digital chassis, especially gaining traction with Chinese EV makers, where can we go with that?
Okay, building on that. The automotive growth is strong. Digital chassis wins are piling up, especially in China. So here's the outrageous but plausible idea.
Lay it on us.
Instead of trying to pick winners among the, let's face it, pretty volatile Chinese EV stocks themselves.
Right, tricky market.
Consider looking at companies that make the specialized testing equipment for all the advanced sensors going into these cars. Think LiDAR, radar, ultrasonic sensors, the stuff that makes ADAS work, the stuff integrated with platforms like the digital chassis.
Ah, testing equipment for the sensors. Interesting angle.
It's a bit of a sideways play, right? You're betting on the increasing complexity. More sensors, more features, more ADAS means more, and probably more sophisticated. Testing and calibration is needed, especially as regulations tighten.
Okay, I see the logic. What's the outrageous part?
The outrageous part is finding these companies. They might be niche players, not household names. You need to do some serious digging into the supply chain, figure out who makes the best-in-class testing gear for these specific evolving sensor technologies, and who might benefit from future standards.
So, requires deep homework. Plausible part.
The plausible part is just the sheer trend. More silicon in cars, more advanced features, especially in that fast-moving Chinese EV space. All that tech has to be tested rigorously. So the demand for specialized testing should logically grow, creating a potential tailwind for these equipment suppliers.
Makes sense. But the risks.
Oh, plenty of risks. It's a niche market. Testing tech itself can become obsolete if sensor tech changes rapidly, and it's still tied to the overall ups and downs of the auto industry. So yeah, extreme caution and thorough research are absolutely key here.
Understood. A fascinating, if definitely non-obvious idea based on the call.
Oh.
Okay, that wraps up our deep dive for today. We hit the numbers, the strategy, the outlook, and threw in that speculative trade thought.
A good overview.
And just to say it one more time, that trade idea, purely informational, maybe a bit of entertainment, definitely not financial advice. Always do your own homework before making any investment decisions.
Absolutely critical.
We're always curious about what you're watching, which earnings calls have caught your eye, what sectors are you digging into? Let us know.
Yeah, we'd love to hear from you.
Thanks for tuning in to Talk Tickers. We'll catch you on the next deep dive soon.